Focus. Ideate. Innovate. Enable.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
A simple fact that is hard to learn is that the time to save money is when you have some. So are you taking the right steps to save and grow your wealth? Let's find out. Hello and welcome to the Mutual Fund Day Family Financial Plan series, a show that helps you chart out the best path to attaining all your financial goals. Each episode, we feature a different investor from a different part of India whose life has changed thanks to the right financial planning. This episode is no different. We are in the city of Vadodara to meet with Ajay Sardana, and also joining us is Govind Mishra, his financial advisor. So let's kick things off with a brief look at Ajay's financial planning journey.
On this episode of Mutual Fund Day Family Financial Planning series, we bring you the investment planning journey of Mr. Ajay Sardana from Vadodara. Ajay Sardana is a businessman and his family includes his two sons. Sayam, who is currently pursuing a degree in computer engineering from JIIT Noida, and Shivam, who is studying in class 6. Ajay's wife, Dr. Jyoti Sardana, is an Ayurveda doctor who practices in Vadodara itself.
My investment journey started way back in 1998 once I got married. My wife was basically from an investing family. So I was a very carefree person. Whatsoever my salary, I used to spend it. So once she joined me, she said we should start investing. And RD, recurring deposits, were the flair at that time. So we started with the RD.
I learned that from my parents that we have to invest in FDs, RDs, and in post office. Small investments I learned from my parents, and then we started slowly investing in this property sector. But and we gained also a little bit. With that time, we learned something about markets, and we came in the market and we had a nice gain. We learned about mutual funds, stocks, and slowly we gained the confidence, and we started in that sector also.
Mr. Sardana started his investment journey almost 20 years ago with FDs and RDs. However, his entry into mutual funds investments started much later.
The mutual fund, practically I started in 2002 onwards. Once the FMPs were introduced, the tax structure were very favorable to that. And gradually we moved to these SIPs and lump sum investment, ELSS. So various different models I have been adopting, but the journey started in 2002-2003 with the mutual funds.
Almost 15 years into his mutual fund investments, Mr. Sardana is patient when it comes to his goals and is confident of achieving it because of his long-term horizon.
My long-term goals are that I should create wealth for myself and for the society. So once I retire around 60 or so, which I plan to retire, so I should be having enough corpus to live a healthy life for myself and my family, and I should be able to contribute to the society. I want to open an NGO where I can fund that NGO, and we will be happy to serve with the cancer patients. Yeah.
All right, now that we have a broad understanding of Ajay's financial planning journey, let's take a short break. On the other side, we'll be decoding his balance sheet, and we have Govind joining us to do just that and also provide his insights on money management. Stay tuned to CNBC TV 18.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back to the Mutual Fund Day Family Financial Plan series. In the previous segment, we got an understanding of Ajay Sardana's financial planning journey, his goals. In this segment, we'll be going into detail about his investments and, of course, the way ahead. And to help us do that, we're joined by Govind Mishra, his financial advisor. Gentlemen, thank you so much for joining us. Ajay, you started your investment journey pretty much early on, 98. You were about 24 years old. So what was the trigger for that?
I got married at that time and my wife is a doctor. So basically she was a trigger for me because I was a very carefree person as a bachelor and I hardly used to save anything which I was getting. So when she joined me, she said it's a good habit, we should start an RD, because she was from a family where RD was a very, very popular instrument for saving. So she was you can say, my mentor or guide first.
You mentioned that your wife has played an important role in your investment planning journey. So how do you plan your finances together? Because for dual income families, that's a very key objective, planning your finances together. So how do you two go about it?
Yeah, usually we discuss during the weekend that this is the inflow we have every month and what are the expected expenditure we have. So leaving the expenditure whatsoever we can go for SIP route or what lump sum we can do. So it's a mutual discussion which happens, and even now the kids are participating. The elder one is being 19 and younger is 11. So as a family we decide what to do, whether to go for an IPO or go for a mutual fund. So it's a joint decision by the family, you can say.
All right, that's a good start. All right. Govind, let's come to the initial diagnosis of Ajay and his family's financial portfolio. How would you characterize its performance so far?
First of all, I would like to congratulate Mr. Ajay because when he started at very early age, and the best part of his portfolio which I have seen across is that investment across the asset class at a right time. Along with that, now if you see as in how the investments have been done, it is pretty well as for the requirement of the market at this point of time, but it was little scattered. So the first thing what we did in that case is that we consolidated and brought everything together. So that gives a really very clear picture about how we need to go ahead with the investments and various investments that can be added to his portfolio.
All right, and I noticed that because the bulk of investment is in debt instrument, is the idea there to kind of create a safe pool of money and then move on to say equity mutual funds when Ajay's risk profile improves, when he wants to take on more risk?
See, when I went through his portfolio, first thing which I noticed about his cash flows. So now if you see the 50% which is into debt, and looking at his profile and looking at his cash flow, we need to gradually move to the equity side. Equity, it can be through direct equity which he is taking and through mutual funds. So what we have suggested and the way gradually we are moving to is that suppose in like tax-free bonds, if we are getting whatever that interest component which is coming from this tax-free bonds and FD, gradually we want to build a portfolio of the interest into mutual fund through SIPs. So that is one thing, because we want to take the equity part to minimum to 55 to 60% of the portfolio, looking at his profile at this point of time. So that is a gradual shift we are trying to do in his portfolio.
All right, let's come to the approach towards investing. Did you start with lump sum, then progress to SIPs, or was it the other way around?
I started investing in mutual funds through FMPs, which was a flair of the time, and the taxation was also favoring it, because after 365 days it became tax-free. So my initial investments in mutual funds, everything was through FMP. You can say it's a lump sum investment. But when the taxation changed, they made it long-term capital gain after 3 years. Then I moved to SIP route.
All right. Govind, what's the ideal strategy for a mix of fund products when it comes to lump sum or SIP investing? What's the ideal strategy here for investors watching at home?
See, looking at this point, when the market are at Nifty at more than 10,000 level, so we look at as an investment through STPs, which is systematic lump sum investment. We prefer STP as a route through which we can invest. So that is parking money into liquid fund and making an investment in a stagger manner. And whenever we get an opportunity, there is a dip in the market, so we can switch that investment directly into the equity from liquid. Second option with SIP, I think SIP investment is for a long period of time. That is, I think it can be for 10 years, more than 5 to 10 years. So SIP is a wealth creator in a long period of time. That's the reason I always talk it is a simple, intelligent practice.
Okay, but
that is
what happens for investors who say invest in a fund via SIPs, but they're not getting the returns that they expect? What would you tell them when people approach you and they say that they're not very happy with the kind of returns profile of a fund? What's the strategy there that you would advise them?
See, strategy is looking at what is the risk profile of that investor and what type of investment product that what SIP fund they have selected. Mainly for a long-term investment, we always prefer diversified fund. Reason is that diversified fund, they have got the sector allocation, it is defined by the fund manager. So most of the 70-80% of the portfolio, like SIP, it has to be into the diversified fund rather than getting carried away by any sector. So just anybody who wants to come through a mutual fund through SIP, it is always preferred, which we prefer, is that go into the diversified fund, or small portion can be into mid and small and sectorial funds.
All right, let's speak about your goals. Your short-term goal is buying a house. So how have you aligned your investment strategy to this goal? You already have some property you've already bought, but buying a house is a short-term goal. So how has the investment strategy played out there?
Yeah, I plan that I will be paying some down payment and then taking a loan. So I can pay something as a down payment and then take an EMI.
Ajay, give us a breakup of your equity fund products portfolio that you have. We spoke about debt earlier. Now we come to equity. Give us a breakup, thematic, flexi cap. What's the split?
Yeah, currently, as Govind said, most of my investments are in diversified equity funds. But I have some in, you can say, sectoral funds also. So I would say diversified, pharma and banking. These are the three key funds which I have in my portfolio.
All right, let's take a short break on that note. But we'll be back to discuss the financial planning journey of Ajay Sardana with expert insights from Govind Mishra. Stay tuned to CNBC TV 18.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. We are on the last leg of this episode of the Mutual Fund Day Family Financial Plan series, where we are chronicling the financial planning journey of Ajay Sardana. And of course, Govind Mishra joins us for his expert advice on money management. Ajay, let's talk about tax planning. How have you structured your investments for tax planning, ELSS, other options? How's your investment strategy been on this front?
Usually the ATC 1.5 lakh limit is covered by the PF itself, and NPS 50,000 we are putting lump sum. So ELSS per se for the tax saving is not useful for me because already 1.5 lakh limit I am doing it. But still I am doing because the returns are good in ELSS, because the fund manager gets more time to plan his strategy. So I have invested in ELS schemes, though it is not helping me in tax plan.
All right, Ajay, you've listed your long-term goal as creating wealth for self and for society. Could you care to elaborate on that, and how do you hope to achieve this goal?
Yeah, my long-term goal is that when I achieve the retirement age, say of 60, I should have enough funds to fulfill my dreams. Like initially we plan to visit many places, so all these things. And once we have enough corpus available, I plan to open an NGO, say with the initial corpus of 1 CR, so that we can help the cancer patients. The cause is very close to me. I have seen the suffering of the cancer patients. So that's my long-term goal. And the approach I have taken is that, again, through this systematic investment planning, once I generate the huge corpus, so 1 CR from that I will be putting in that NGO.
Okay, a noble cause. How do you align his investment strategy to achieve this goal?
I think the way his portfolios are aligned at this point of time, I think he will be able to put more than 1 crore into for his NGO. Generally, how we are trying to address this goal, it is by the tax-free bonds and the some bond investment what he have. The amount of interest that we are getting out of it, so that is solely we are transferring through SIP for another 17 years. So that will have a substantial amount which he can cater this goal for him.
All right. And what provisions do you have for emergency funds? We spoke about this a bit in brief earlier. Could you give us more details about your planning for emergency funds?
Emergency funds, basically the FDs are there, the RDs are there, so those are the liquid, and now we will be putting in liquid funds also, as advised by Govind. So these will be the short-term emergency funds from where we can get the money back in 24 hours time.
All right. And what are your plans for post-retirement? What are your retirement corpus plans?
Yeah, I have invested in the superannuation plan. So that corpus will itself be funding my retirement. Plus I have NPS is a government scheme, so we are putting 50,000 for the tax saving. So that corpus will help. Then PF returns what we will get, and plus all these mutual fund returns. And so I hope that I will have a sufficient fund to create my happy life after retirement and help the society also.
All right. And Govind, strategy advice when it comes to creating a retirement corpus, what would be your advice to?
I always believe that you need to stick to the asset allocation. Asset allocation is the most important thing. Along with that, the profiling, which is required. So asset allocation, like suppose sometime real estate has given a very good return, sometime debt has done really good. Now it is a cycle for equity to do good. So if you are sticking to your asset allocation and profile, I don't think retirement you will enjoy your golden retirement period.
All right, and let's come to the final question. Almost a 2-decade investment journey for you. What are some of the key lessons that you have learned in this journey?
The lessons I have learned is that you have to be patient in this market. So the word which I heard one of the sessions is the Sai Baba theme, Shraddha and Saburi. You have to be patient and you have to have faith. I have lost heavily also in the markets when the markets went down, but the patience was there and the faith was there that the cycle of the up cycle will come. So Shraddha and Saburi are the things which I have learned in this market.
That's a very good point. And summary statement from you, Govind. What's your word of advice for investors watching at home?
Don't speculate the market. Try to stick to your goals and just try to invest as for your goal requirement. Definitely you will succeed in investment.
All right. On that note, we'll wrap up this episode of the Mutual Fund Day Family Financial Plan series. Thank you to Ajay and Govind for sharing your story and, of course, your insights on money management. We'll be back with another episode chronicling another financial planning journey of an investor. Till then, stay tuned to CNBC TV 18.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Focus. Ideate. Innovate. Enable.